Tobacco, one of the most lucrative industries in history. You'd be hard-pressed to find a better performing investment over the last century, but how long can it keep puffing out profits? Today, we're going to take a look at one of the largest tobacco companies in the world, the Altria Group. A single dollar invested in Altria in 1968 would have turned into $6,638 by 2015. That's with dividends reinvested, of course. This amounts to a total return of 663,700%, or 20.6% annually. Smoking rates have been declining for decades, yet the company has continued to grow by raising its prices. However, as I will soon explain, the future of Altria may be less tobacco reliant than you thought. In this video, I'm going to do a comprehensive stock review of the Altria Group and explain whether it deserves a spot in your dividend stock portfolio. My name is Zach. You should leave a like and subscribe to the channel if you enjoy the video. You should never invest in a business you don't understand, so today I'm going to provide you a full picture look at the business and stock history of the Altria Group. Altria has a long and complex history dating all the way back to 1847. It was originally founded as Philip Morris, which went on to become one of the largest cigarette and tobacco manufacturing companies. It became publicly traded in 1938, and by 1972 their top brand Marlboro became the world's best-selling cigarette brand. Around this time, the tobacco business began to face huge political pressure. The health risks of cigarettes and tobacco became obvious despite arguments from big tobacco companies. Ultimately, the industry became heavily regulated, faced constant lawsuits, had its advertising ability banned, and encountered numerous anti-smoking public health campaigns. This caused cigarette smoking rates to decline from 42.4% of adults in 1965 to 13.7% in 2018. Additionally, the average number of cigarettes smoked per day among smokers decreased as well. Despite this, the tobacco business continued to financially grow as they raised prices to counteract falling usage. Although heavily tobacco reliant, Philip Morris & Company was really just a holding company. They had purchased or had ownership in many different businesses over the years. For example, they previously owned both Kraft Foods and Miller Brewing Company. In 2003, the company rebranded from Philip Morris Companies to Altria Group. The reasoning for this was to emphasize Altria as being a holding company and begin to make the distinction between it and the tobacco-connotated Philip Morris. In 2006, Altria split off Philip Morris's international business, which is now traded under the ticker symbol PMI. In recent history, Altria has made many investments trying to future-proof the business. So what does Altria's business look like today? Altria Group holds diversified positions across tobacco, alcohol, and cannabis. Their goal is to provide products to adult consumers while returning maximum value to shareholders through dividends and growth. Altria is broken up between their operating companies, service companies, strategic investments, and joint ventures. Their operating companies are businesses they wholly own. This includes Philip Morris USA, which is the nation's leading cigarette manufacturer. Between all their brands, Philip Morris controls 49.7% of the cigarette retail share. This is led by their Marlboro brand, which controls 43.1% alone. Marlboro is unquestionably the most popular cigarette brand and has been proven to retain popularity over many decades. There is no doubt that Philip Morris USA is still the backbone of Altria's cash flow. Another Altria holding is the U.S. Smokeless Tobacco Company. It's led by the brands Copenhagen and Skoal, which make up 53.9% of the total smokeless tobacco market share. Altria also owns John Middleton, which is the leading manufacturer and marketer of pipe tobacco and cigars. It owns popular cigar brands like Black & Mild. Outside of tobacco, Altria owns St. Michel Wine Estates, which is a top 10 producer of premium wine in the United States. This is a very small part of Altria in comparison to the smokable and smokeless tobacco section, but it offers much needed diversification. Altria's final operating business is the Philip Morris Capital Corporation. This is an investment company that manages a portfolio of leased assets, including domestic and international aircraft, power plants, and real estate. Altria's service companies include Altria Client Services and the Altria Group Distribution Company. Their internal client services business provides Altria subsidiaries with services from various areas of expertise. This includes legal, marketing, analytics, finance, regulatory, etc. The distribution company provides sales, distribution, and consumer engagement services to Altria's tobacco companies. Altria's strategic investments have grown significantly in recent years. In 2016, Altria made an investment in Anheuser-Busch InBev, giving them a 10.2% ownership in the company. They are the world's largest global brewer and own popular alcohol brands like Budweiser, Corona, and Modelo. This helped diversify Altria's business away from tobacco while providing cash flow and adding a strong asset to their balance sheet. In 2018, Altria made a $12.8 billion investment into Juul Labs, giving them 35% economic interest in the company. This is the US leader in e-vapor, which is a healthier alternative to cigarettes. Juul has a fantastic business model and was a viral product for a number of years. It offers a natural transition for Altria's business as they look to offer healthier alternatives for smokers. However, since their investment, Juul has seen significant political pressure due to how popular it became among teens and young adults. This resulted in flavored vapor being banned, significant regulations, and massive lawsuits against the company. In the short term, Juul has become a financial burden for Altria, which I'll discuss later in the video, but it remains an interesting long-term play. Another investment Altria made in 2018 was an agreement to acquire a 45% equity stake in the Kronos Group. This was Altria's first move into the cannabis sector, which is another logical path for the future of the company. Kronos owns various CBD, medical, and recreational marijuana companies based in Canada. Similar to Juul, I agree with Altria's strategic angle of this investment, but it's caused financial burdens in the short term. In 2019, Altria made a joint venture to acquire 80% ownership of certain companies that manufacture, market, and distribute on nicotine pouches globally. This is actually a very interesting move, and nicotine pouches are a growing industry that offers another alternative to tobacco. Overall, I think Altria's management is making the right strategic decisions and positioning their business for future growth. As a whole, Altria has many competitive advantages that allow it to retain market share and ensure future profits. They have powerful brands such as Marlboro, Black & Mild, Copenhagen, Skoal, On, Juul, Budweiser, Corona, Modelo, and even these newer cannabis companies have been putting an effort into brand building. This helps promote customer loyalty, which is very important to growing and retaining market share. Additionally, nearly all of their products are high margin with the ability to raise prices, which gives them great cash flow to invest in new areas. Altria should have the ability to buy their way into future markets as the tobacco business declines, which is a strategy already shown by their Juul and Kronos investments. Perhaps most importantly, although it may seem bad to say, many of their products are highly addictive, which increases the predictability of profits significantly. These advantages are not without major risk, though. The company is prone to expensive lawsuits, government regulation, specific taxation, changing consumer behavior, and growing negative sentiment around the tobacco industry. Altria gives an extremely detailed accounting of all their potential risks in their annual report, which is linked in the description. However, if you only read that section, you'll likely never want to touch this stock again.
You want to buy some death sticks?
You don't want to sell me death sticks.
I don't want to sell you death sticks.
You want to go home and rethink your life.
I want to go home and rethink my life.
Health. It's obvious that smoking is addictive and bad for you. This has been widely known for over 50 years. I understand that people may choose to not invest for that moral reason, and there's nothing wrong with that. However, from my perspective, the health consequences are so widely known, and people still choose to use the products. At a certain point, we have to stop pretending that people don't have personal responsibility for their choices. A lot of people just enjoy using these products. They are aware of the health impacts, and they choose to use it anyway. That doesn't mean we shouldn't have public health campaigns and try to persuade children away from using it. We can do both. Heck, companies like Altria already invest heavily into these types of campaigns themselves. Now, I know that this opinion is not shared by everyone.
I hope the stock goes to zero, and I would tell anyone watching this, they should pay zero attention to anything to do with earnings, revenue, chief growth manager, or whatever disgusting term they give the person who's going to run a company that sells poison to children. This is a stock that should be divested.
So we sell alcohol stocks to zero as well, also oil stocks?
I don't think it's the same thing at all. I don't it's the same thing at all.
All right, now let's dive into the economics of the business. For perspective, 87% of the revenue comes from the smokable products division, 10% from smokeless products, and 3% from wine. So Altria is still very much reliant on its core tobacco business despite efforts to diversify. Altria's revenue has been steady around $24 to $25 billion over the last 10 years. However, the gross profit, operating income, and net income have all been growing in the same time frame. The gross profit has grown from $9.1 billion to $12.7 billion, which is a 13.66% compound annual growth rate. The operating income has grown from $6.2 billion to $10.3 billion, which is a 15.15% compound annual growth rate. The net income has seen similar growth, going from $3.8 billion to a peak of $14.2 billion. However, in 2019, the net income was negative $1.3 billion. The reasoning for this is the financial burden of Juul and Kronos I mentioned earlier. Altria had to pay over $8.6 billion in Juul impairment charges and $1.4 billion in Kronos losses. This is the financial burden these investments have caused, making their 2019 earnings per share negative. Some of these losses and impairments have carried over into 2020, but hopefully Juul and Kronos will soon get over their legal troubles, stabilize, and become profitable in the future. So aside from the Juul and Kronos losses, which has lowered their recent net income, Altria has been steadily growing its cash flow. The 2019 free cash flow per share is $4.06, which is far greater than their dividend per share of $3.28. Despite changes in consumer behavior around smoking, Altria's cash flow has allowed it to pay a consistently increasing dividend. The Altria dividend has seen 51 years of dividend growth with a 9.4% 5-year growth rate and a current 8.22% dividend yield. The payout ratio has hovered between 75% to 80%, which is actually the target payout ratio of the company. According to the Q3 report, Altria has a long-term objective of a dividend payout ratio target of approximately 80% their earnings per share. This past year, Altria has been valued at its lowest price in the past 6 to 7 years. It has a 9.59 PE ratio, which is incredibly low in a market that's heavily overvalued like we have today. This low price is what's fueling the very high 8.22% dividend yield. This type of yield on cost is unheard of in Altria's history other than in the past year or so. Normally, Altria trades between a 3 and 5% dividend yield. Despite this high yield, the dividend is incredibly safe and likely to continue to grow. In fact, it just had a 2.3% dividend raise this past July. Based on Q3 earnings, Altria is set to surpass its 2019 numbers, pointing to continued growth for the company. Altria seems to be a very interesting investment opportunity right now. On top of this, I think it actually has a really compelling long-term bull case as well. Altria has a real chance to become a major player in the cannabis space, especially if marijuana is legalized recreationally across the United States. If or when this happens, I expect Altria management to pounce on the opportunity. In the perfect version of that scenario, Altria has a ridiculously high ceiling. I love the opportunity of this company, but the legal problems are what hold me back from investing heavier. Lawsuits, government regulation, and tobacco declines are all real risks in owning Altria long term. Currently, I have 44.19 shares of Altria with a dividend yield of 8.82% and a cost per share of $40.08. So in total, I have $1,723 invested in MO. Personally, I'll be buying more when the share price is around or below my cost per share. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. I'd greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Also, you can follow me on Instagram at Dividend Data, where I've been posting frequently. You can support the channel over on Patreon, where you can gain access to a community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.